Hello traders, welcome to the channel, and today I want to cover and update some of the charts that I published before. Let's start with the Dixie, a nice 3 drives pattern formation suggesting a pullback or suggesting a nice retracement back to 105.12. At least that's the default target for that 3 drives pattern formation. That default target for that pattern also converges with 50% Fibonacci retracement, which is the default target also for this bearish shark pattern completed before at 105.92. We have new higher highs above that completion point, but I will expect the Dixie to pull back to the daily fractal support level, previous fractal support at 105.12. Of course, for that weapon, we may see the dollar related pairs trading higher, and for that weapon we need to some of these pairs needs to break above the most recent resistance, in this case for the cable at 127.03, 127.40. basically 127.40 may trigger a major move to the upside, eventually a retest of the previous highs weekly fractal resistance at 128.61. Even though as I shared before multiple times, and here in the channel and on socials, I published a potential bullish shark pattern at 25.80, and this patterns remains as a possibility. So I will not ignore the possibility for the cable to be pushed lower, forming a new lower low, and if that happens, I will take into consideration the potential bullish shark pattern, which will complete at 125.80. If that pattern completes, we will expect a move to the upside, a bounce. And talking about a bounce, let's also measure the default target for that pattern. Usually the shark pattern will target the 50% Fibonacci level, and if you track the 50% Fibonacci level, that points to 127.20. So basically a retest of this previous resistance level after completing this sequence will not be a surprise. That may also trigger, and later we will talk about that possibility, if the price approaches this weekly fractal resistance level at 128.61 at some point, and considering support levels around this price zone, the 125.80, or even the most recent daily fractal support, if it holds, we may be talking about the potential trend continuation, cup and handle pattern formation. So that being said, pay attention to this price action at this point. We are also facing the 38% Fibonacci retracement level on the cable. Let's pay attention to those levels, in particularly the daily fractal resistance, 127.40, it's my level above, or the formation of the shark pattern below support. We have also the euro versus the dollar with nice bullish signals. Actually, those signals are already started to unfold since the lows from 11 June. So we have these previous lows already in divergence with the most recent one. So all this structure for the fiber was printed or supported, let's say, with bullish divergence signals. And even though the price was not capable to, well, at least to recover above the daily fractal resistance 107.46, that's the main resistance for now for the fiber. We have supported 106.70. What to say from this level? We have a nice descending wedge, also actually flat. We have a flat bottom here. So all this pattern points to a potential more downside momentum from here, and if that happens, I will point to 106.08, basically a retest of this previous support level. We have the golden Fibonacci extension there as a reference point, and we have also above the same golden Fibonacci extension of the last swing low projected above 107.98, also as a potential reference for pressure to the downside. If the price achieves these levels, I will expect more downside pressure for the dollar, for euro versus the dollar. The same way, if the price achieves these lows again, I will expect a bounce after a retest of these lows. That being said, let's move to the Australian dollar. We have nice support at 66.34 acting as a neckline for a lower degree. We're still in a 4 hours time frame chart, but the projection for this pattern is very limited. We have an head and shoulders pattern with default targets at 65.96. We have resistance for that pattern at 66.89, so we already know if the price breaks the recent fractal resistance will invalidate the pattern, and in fact that may trigger momentum to the upside and eventually threatening the weekly fractal, breaking it and providing more momentum to the upside. But at this point, and based on the price structure that we have, we should pay attention to this fractal support level at 66.34. A clear violation of these levels should trigger a move to the downside. As we can see, we're still inside this major range between, let's say, between weekly fractal levels or weekly fractal resistance and the weekly fractal support levels. And that being said, it's not impossible to see the Aussie being pushed to the bottom of this range again, and the head and shoulders also pointing to that possibility. Of course, a violation of these highs, weekly resistance 67.04, of course that may trigger moves to the upside for the Aussie. The Kiwi rejected the previous structure support level. We have this triangle shape, this sideways moving process printed before. We have a breakout of this structure, and today's session we saw the Kiwi rejecting the recovery above this structure. So if the price recovers above, we may see the move to the upside, but it looks like the Kiwi, it's actually providing a nice entry point for more downside, rejecting the previous structure support. That implies, or that suggests, more downside momentum or more pressure to the downside. We have also, I have projected a bullish crab pattern at 60.18, the golden Fibonacci extension level. I have this pattern projected here since last week, I believe, and I believe also I shared this pattern before with you. So basically, it's still a possibility, a push to the golden Fibonacci level, and then reaction. I will expect a reaction to the upside after forming this sequence. Then we have the Swiss franc. I also pointed this possibility on my last analysis, pointing to the possibility of a retest of this or the reinforcement of this resistance. This is previous structure support level turned into a resistance level, and basically I need to see, now that we are approaching these highs, I need to see a pullback in order to form the right shoulder for an inverted head and shoulders pattern formation. Then of course we need to wait for the breakout of the resistance, but for now I'm focused on the potential pressure, and we can use the 200 moving average as an element of pressure to the downside, eventually forcing the retracement. I want to see the right shoulder being formed, and then the price approaching again this previous resistance, and that will form the head and shoulders pattern. Of course, we need to validate with a clear violation of the resistance. You already know how to do it. Then we have the dollar versus the Norwegian krone. I shared this pattern last session, at the end of the last session, a bearish bat pattern completed at the 88.6% Fibonacci retracement, a lower degree bearish bat pattern at 10.71, suggesting a minor, or let's say a limited retracement back to the 38% Fibonacci level, Usually that's a default target for that bat pattern. 1062, we have nice support, at least for now we have nice support at the 38% Fibonacci level. Let's see how the market unfolds, but for now there's nothing more to add for the Norwegian krone, unless this major triangle that we are trading within. So basically we're still inside this triangle, we're still forming this triangle. In my point of view, this is a nice consolidation triangle, and we have already our price range well established. We had the weekly fractal resistance 1075, and we have the weekly fractal support at 1042. So that's the major range for the Norwegian krone, and we will keep tracking the patterns inside this range. Then dollar versus the Mexican peso, another pattern that I called your attention on my previous analysis. The potential formation of a bullish butterfly pattern, 1797, 127% Fibonacci extension level, nice support, new daily fractal support, 1785, and the reaction towards the Fibonacci retracement levels. At this point, we are already trading the 50% Fibonacci level and approaching the monthly fractal resistance. We are talking about a resistance that goes back to October 2023. So basically, that's a major resistance for the dollar versus the Mexican peso. Another pattern that may start to emerge if the price keeps trading higher, of course, and taking into consideration the shape of this potential move, we may be talking about a potential trend continuation, cup and handle formation. Another example in this case for the dollar versus the Mexican peso, which will depend on the clear breakout of the resistance. Of course, that should be preceded by the formation of a handle, which implies, of course, a retracement after the reinforcement of these previous highs. Euro versus the pound, I was tracking the possibility of a head and shoulders pattern formation, the inverted head and shoulders pattern. At this point, things started to change a little bit in terms of price action. So at this point, we may consider two things. One of them, the same pattern that I posted before, and I shared it before we do, 84.96 golden Fibonacci extension. That pattern remains as a possibility, bearish shark pattern, actually projected right at the previous monthly fractal support that comes from February this year. So basically a retest of these previous lows will not be a surprise, so that pattern remains as a possibility. The other possibility, and because today's sessions we can see the price rejecting to trade above this previous or the previous resistance level, and if the price holds below these levels and starts to pull back again, we will track the possibility of patterns starting to emerge around this previous support level, basically between 84.05, 83.85, 83.84. There's a very small range between the 88.6% Fibonacci retracement and the 113% Fibonacci extension levels. So this range will be crucial for the pair to hold, because if the price can't hold above these levels, and of course admitting the possibility of a push to the downside, if the price can't hold above these levels, we will see a much deeper pullback for the pound, for the euro versus the pound. Okay, so basically two situations to pay attention to. One of them, the possible bearish shark pattern, and then patterns projected below 84.05, 83.84, or a major deeper pullback towards the golden Fibonacci extension. SPX 500, a nice resistance already completed at 55, already formed at 55.02. We have a minor range between that fractal and the support level at 54.56. So there's a minor range already for the SPX 500. I admit the possibility of a very slow process of consolidation towards this channel, this major channel support level, eventually not so aggressive towards the lows or towards these bottoms or the bottom of the channel. Eventually we will see a very slow progressive corrective move, and eventually an approach to this channel support level. I can be wrong and the market can be very aggressive, of course everything can change, but eventually we will see a period of time where the market, remember we are approaching the summer, and there's conditions for a long period of consolidation during these summer periods. So I will not be surprised to see SPX 500 entering into a very long period of consolidation or correction towards this bottom of this ascending channel. We have also crude oil. I also pointed these, I also shared this chart actually on Twitter during this week, pointing to this fractal resistance at 82.23. We have supported 80.58. Actually, we have already a new fractal, a new intraday fractal support at $80.50, $80.50. And we are already back to the daily fractal. We are threatening the daily fractal again. Expanding triangle, at least for now, I see this as a potential expanding triangle. This may push the crude oil a bit higher, and of course if the price breaks below this structure, things may change, and of course my expectation will automatically change if that happens, but I assume the market will force more bullish momentum, considering the potential expanding triangle that crude oil is trying to form. Let's jump into the German DAX. We have nice support at 17,944, resistance at 18,377. So we have our range for the German DAX, or at least a major range for the German DAX between fractals. One of the patterns that can emerge depends on the breakout of this support level. We are talking about a potential the eventual crab pattern, so that will depend how the market will react from this current price zone. But if the price starts to pull back again, we will track the possibility. Of course, not only the breakout of this structure may offer a move to the downside, a breakout of this period of consolidation, even if you want to consider the major fractal support, but the breakout of this structure may trigger a move to the downside. And I will not be surprised to see a push to the golden Fibonacci extension level, completing this bullish crab pattern at 17,673. That's my main objective if the price breaks below. Of course, this breakout may offer an opportunity to trade with the German DAX even lower. But once the price approaches these levels, you should pay attention to the potential bounce after completing that sequence. Another pattern that can start to emerge, that will depend on the breakout or the recovery above this resistance level. If the price recovers above 18,377, we may consider other patterns that may start to emerge above, let's say, between the daily fractal and the weekly fractal. There's a range here, very large range to consider, but we are far away from those levels at this point. So, but if the market breaks above this resistance, of course, that they may offer also a move towards the previous fractal resistance level. So we have also a window for a move to the upside. But at this point, we're still trading, as I said, we're still trading inside this major range for the German DAX. And if the price starts to pull back from this price zone, we should pay attention to potential moves to the downside. So basically, we are facing a major We can call it a bearish flag pattern if you want to consider this as a flag pattern formation on the German DAX. So once this pattern completes, the price should trade lower. Ethereum completed the bullish shark pattern at 32.55, basically the golden Fibonacci extension level right there, acting as element of support, which triggered this move to the upside, or at least this most recent move to the upside. We have default targets for that pattern at 36.03. That's the 50% Fibonacci retracement level. Other levels to consider: daily fractal resistance level 36.28, and of course the daily fractal support 32.31. No need to mention that, but most important, the daily fractal resistance. If for some reason the Ethereum recovers above this fractal, we need to consider the false breakout of the support level. We have the previous support level, we have a threat to break this level, to break the support, and if the price breaks above this resistance, we will be talking about the false breakout of support. What that means? That means that usually, with a very higher probability for that to happen, the market tends to search for the golden Fibonacci extension. In this case, it points to 38.73, and this will complete, of course, the bearish or another bearish sequence. Another bearish shark pattern may unfold if Ethereum confirms this bullish. If the Ethereum confirms the false breakout of the support with the violation of this daily fractal resistance level. And that completes my analysis for today. I hope you enjoyed, and I hope to see you in the next video. Have a nice trading day, and take some rest for the last day of the session, or the last day of the week, which is tomorrow, Friday. Stay well.